Yo, 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 what is up, everyone? This is your host, Ricky. Welcome to the Tales of Web3 Season 3, Episode 1. Our guest today is Peter, the partner of 1KX. I'm really excited to have this conversation, especially because Peter has been invested in crypto in a long, long time and also is a huge bullisher of Pudgy and the Penguins. So the first question today, please, Peter, make a little bit intro of how you get into Web3, what's your journey have been like, and how did you end up at the partner of 1KX?
Thanks for having me. Super excited here. I've told this story many times, but it started my journey of Web3 started off with me getting very, very bored of Web2. I was a product designer then. And I started going to Ethereum developer meetups in Sydney run by an OG called Boki Puba. Weird username, but he was the sort of the birth of the whole, he birthed the whole Ethereum Sydney community in Australia, right? Um, sort of having mostly designed products and been a nerd about product, I obviously thought that with a world computer, surely you would have new exciting applications that would emerge. So I jumped in full time, trying to learn about the space, trying to figure out how I can contribute. And I would say like that this was the beginning of a long, period of hardcore unemployment. It just turned out that like it was a little too early. No one, this was like, by the way, I guess I discovered crypto meaningfully, especially Ethereum in 17. And in 2013, I played around in Bitcoin faucets, but digital gold, that was boring to me. A world computer was much more exciting, right? So
it's sexy.
Yeah, it's exciting, new territory, right? But super, super wrong. No one gave a shit about applications. The only app that was really you could really use that was like really hyped was Augur. However, like it took like 20 minutes for you to sync your like Ethereum node that you had to run locally, which is insanity.
Crazy. That's crazy.
Yeah, it was like a 20. Yeah, it's like crazy, right? And there's like $200 of liquidity at the end of it for you to bet on, right? Maybe this was a little later than 18, but yeah, in 18 things crashed, and I'd realized that how horribly wrong I was. No one cared about applications. No one built applications. So that began my pursuit. I would say like I mostly started with like, hey, let's find a role, let's find a job to contribute to Web3 through, and applied to everything from everything non-technical, from social media manager to head of comms to designer, right? But no one would no one to BD whatever. And I couldn't find a role. No one was hiring anyone outside of engineering back then. So I sort of thought about like, how am I going to spend my time here and having committed to this, right? And I decided to just study applications, and I created this UX working group focused on meta transactions, now known as account abstraction, right? Back in 2018. This was called Metacartel, and at the same time, I started writing a newsletter about applications that was released every week. I used every app released in every chain for about a year.
Are there a lot of the good apps back then?
Like no, they were all horrible.
That's what that's what I thought, right?
I used everything from like Tron to EOS to mainnet to XDAI. I found Etherux the day it was released and wrote about it. Ooh. I didn't buy any because I was like, I just thought it was so stupid that right. And I ran a podcast as well along the way. Interviewed like 50 application founders. So I just spent the whole time studying this and building up this community called Metacartel, right? Nice. And yeah, I think it was just like, I spent all my time studying what were the net new use cases, net new opportunities with applications. And, through Metacartel, gave out grants initially, to teams building apps, and eventually like scaled that into an investment DAO that started writing checks, and building relationships with anyone building net new applications from DeFi to games, right, to social, to messing about of NFTs, right, and eventually in mid-19, I really enjoyed the whole process of studying the application layer, playing with everything, meeting founders, building relationships, supporting them through grants and investments, small checks, right, and I had built a relationship with Lassa and Chris from 1KX. Back then, it was just them two, nice. And an operations lead. And having known them, they to me they stood out as the most founder friendly and founder orientated investors around. So I wrote up a deck, and that pitched myself as a new investment team member to them, and then sent it
That's
over. And
cool.
thankfully, they sort of humbly sort of looked upon me. Oh, I and decided to bring me on board, and that was the start of my role at 1KX, which has been 4.5 years
4 years, 5 years
since.
now, right? It's a
Nearly,
long
yeah,
time.
was 6 months shy, but yeah, they took a chance on me, and I've been, I would say, yeah, entirely focused on net new consumer applications ever since.
Dude, this is really fun. And like what is really interesting for today's podcast is actually you are my first professional investor that I ever, because all my previous guests, they are all founders. And so I wanted to pick your brain around like the investor side of things, right? Like just tell me about what is the most fascinating thing about being a crypto investor, right? Tell me about like the ugly, the beautiful, like about this space. Because I know obviously crypto investors, Web3 investors is different than people who invest in like traditional industries, right? I wanted to let you to share about everything on the investment side of things.
I think people over glamorize crypto venture investing a lot. Like venture, like crypto venture, similar to traditional like venture in Web 2, is the is like the get rich slow path. It's like it's a one that's highest variance with the most amount of uncertainty at the end of it, with the most arguably, I don't know, like with the most amount of perseverance needed, right? Like I think that if you're looking for easy money, it's found elsewhere. Like I don't think people realize how many CT traders or degens, sort of like who
Yeah.
like look enviously upon venture, and I don't know if they do, but like I just feel like venture gets this rap for like, oh, these guys at the in the ivory towers and at the sort of the on top of these totem poles. I don't know. Like I don't know about that. I actually think like I do think that venture's really really difficult. And what I love about it is that you get to work with the best in the space for founders who are an absolute joy to work with. And it's a highest variance, highest risk, but you get to work at the best. And I think that's you get to see things go from 0 to 1. You get to be a part of that journey. You get to be a supporter of the new, right? Or be in the defense of the new, right? And I think that's the greatest joy, right? So I think it's like
Nice.
venture um, is all about delayed gratification on a on a long time horizon, right? Especially with 1KX's um, investment strategy. You know, at our size, we have to bet big, and we have to invest in ideas and teams for the long term. At our size, we can't just exit a position like that, or even in one market cycle. There's no way. You know, we actually have to. I think we invest in things that are net new and are going to stay around, right? So I think that a lot of I think true venture capital as a strategy in crypto has been um, has been as a strategy has been diluted by non-real like venture
Non-real
capitalists to call
long-term
them.
non
Yeah,
long-term investors,
they've
right?
been diluted by investors, right, who aren't really truly employing a venture strategy, uh, you know, and who aren't really taking long-term market risk, who aren't looking at, who aren't looking to invest in things that stay and will really create outsized impact in the world, create outsized value, right? And I think like 1KX is a little bit on the boring side with regards to that. We're pretty bread and butter, bet on big ideas and we try to bet on founders who are really gonna put a dent in things.
Do you think there's a middle ground between what you guys are up to and those people who are diluting the long-term vision, the value of
I guess
like
look,
investment?
I don't want to um, step on those in between. I think it's about liquidity profiles, right? And your preference for returns and how much within what time. And there's a need for those market participants, right? But I think people mix up those strategies with true long-term venture, right? Which is all about, I think looking, how do looking for the net new, or looking for the next, true 1000x opportunities, hence 1KX's name, right? Um, yeah, it's I think it's just a mix up. So um, I think very few investors in the space actually employ a true venture strategy. Most hedge funds with shorter time horizons, right?
Yes.
And first, like, that determines what you invest in, who you back. Yeah,
And probably even like what is anyone else around you is doing, right? What is their strategy looks like? That also impacts how you react
that's
to the
right. And
market.
at least why I'm excited about venture is that, I truly believe that this is we're in process of discovering what this world computer can do. And we are just at the beginning. And I do believe that we're going to see, when the decade in which we see, multi-billion dollar of deca-billion dollar companies and networks emerge and get founded every year from now on, right? And that's what
Yes.
I would love to partner with and find and discover, right? And that's sort of always been One Kick's mission.
Let's go. Let's talk about consumer crypto. So for me, I happen to be been doing like building an L2, which means I go talk to all these like app builders, right? And a lot of the questions that I'm getting, right? Literally, there's a founder asking me like, why I'm the ugly child that like VCs who don't want to talk to me, don't want to invest in me, right? Like I think 2024 around certain time period, I forget, it's probably around May to August. People started. There's a small trend, remember, on crypto Twitter, especially. People started to talk about consumer applications, but then boom, nobody is talking about it ever again. So like my question is like, why? Why the VCs are not writing checks to these app builders, no matter they're building like another like X to earn game, if they're building a social application, if they're like why and what is happening in terms of like the landscape?
So I'll give you my full, like, sort of unrestrained answer, but I would also, in defense, I'll start off on the defense, right? Of
Yeah,
the
yeah, yeah,
of
please, please.
why consumes the ugly child. I also think that, um, firstly, I agree in the sense that, like, yeah, like, if you're truly investing in from a venture point of view, right, you're looking for outsized opportunities. There's very few of them out there. So even for 1KX,
Yes.
we deploy quite, I would say like a third of our capital that we deploy into consumer, right, if not a little bit more. And we're outbatting, sort of percentages in terms of deals we go for over the ones we look at is far lower, than areas of middleware infrastructure for sure. Like we take a look at a lot of
100%.
deals, and we swing and lead rounds on very few, right? So I wouldn't like say that it's you know and I wouldn't say that it's this trend is necessarily at the fault of VCs. I think it's just that there's more applications than infrastructure. Putting that aside, you know, I think the main reason why very few venture investors investing in consumer is that they have absolutely no clue what they're looking for. They've never really done investing at the application layer. They have not studied years and years of history there or context, nor have they hit any winners after investing tens of millions of dollars into games or whatever. Right? I don't blame them. You
That's a
know,
good point.
uh, I think it's a hyper rational thing. If you invest in the space, don't see returns, haven't been able to invest in a quality fashion, and don't have a clear sense of what you're looking for, why invest, right? I think number one, that's point number one. Secondly, I also think that crypto is so consensus driven due to the early stage liquid markets that exist that a lot of early stage venture investing that's supposed to be seeking out the highest risk with the highest ROI, right, is often seeking comfort.
Yes.
It's
Yes.
easier to just bet into the next infrastructure trend and sell out, right? Sell tokens with with protocols that have zero traction. I think it's far easier to do that, and crypto has had a far longer history of VCs making money in that fashion, right? So I think there's momentum of that, but I believe that it's really going to change in the sense that um, in the sense that so much of infrastructure technology is only uh, increasingly being commodified more and more by RAS providers, by infrastructure providers, and
I feel
roll-up
you. I
stacks
feel
such as
you.
zk Sync, right? And so on and so on. There'll always be a cutting edge where tech will have an advantage, but more and more of Web3, and also crypto, the largest markets, especially block space, right, where it's always been about chains and tech defensibility, I believe is going to shift and into a game about growth. And I do believe that the
The
fastest growing chains
apps.
are going to be launched by apps or be chains with killer apps. But I actually do believe that infrastructure, let's say with chains, right? We're going to see over the next 3 to 5 years a massive real allocation of dominance shift towards chains that have simply been launched by applications. Why? They seed it initially with their own killer apps, and most importantly, they know how to take those apps to market, support them on the go-to-market front, and also build stronger, higher trust relationships with application builders. Majority of chains in Web3 today are launched by teams that have no clue how to build applications, have never taken apps to market, nor have built successful ones. And I do believe that as chains become easier to build, the technology gets increasingly better. That mode is going to go away, and we're going to see a dominance of chains such as like Ronin or Abstract that are led and grown by infrastructure builders. I mean, sorry, application builders, right? So yeah, and I do see maybe like uh, and I do see a reallocation capital to application centric chains. This is one example in which I see the shift, and sort of the tides turning a little, right? But I think
Very bullishing.
and I think that most investors are going to have to hire for consumer investment talent, or start to focus on here more, right? Most venture firms have already started to do this. Most invest here, but I don't think anyone really treats it super seriously. And I don't think this is talent, nor a historical context that you can buy, right?
I
You can sort of like
100%
look at
feel you.
the amount of capital that plowed into Web3 from Web2 from venture capital firms there, or traditional industries in 21. That they invested without the context of Web3 and paid the heavy price for it, right? Web3 is completely different to Web2. You're dealing with different marketplace dynamics. You're dealing with a completely open source ecosystem. Where tech is not a moat. You're dealing in an ecosystem and a market landscape where community matters way more. Understanding attention matters way more, and understanding net new business models that emerge with Web3 matter way more, right? And I do think that there's a lot to learn from studying history, which and studying the existing consumer landscapes. But I think ultimately you're dealing with a new terrain, right?
And you need to prepare for it. Like I think a common mistake that not only investors but a lot of builders fall into is they wanted to capture the trend when the trend is here instead of trying to make a bet on what's gonna happen in the future. If AI is like the trend right now, and right now our team started to build like or your team started to build like a new AI agent, it's not gonna work because the trend probably not for AI actually, because I do think AI is gonna be different than something like memes
It's
or
always
things
different.
before. Yeah.
It's always different. So
Yeah.
I'm very excited about long term, outcomes of what happens when we sort of mix crypto and AI together. I think it's very exciting. We're probably going to end up with two things, right? Like software that makes us laugh a lot and is really entertaining to look at, right? Agents that do that, or agents that make us money. I think it's like things that make us laugh and things that make us money. Like it's probably going to gravitate around these two, or save
Towards
us
those
time, right? I
two.
think right. Or the third one is definitely like labor slash saving us time, right? Slash doing work. And I think like everyone is generally right on the ball in terms of like the long-term vision in a hype cycle, but almost nothing real ever is built in a hype cycle. Right? Like
100%.
nothing, and I think that like I do believe that like consumer PMF generally takes years and years, and this is a path, of pain, if you will, that it cannot be cheated out of. There is no quick path to long-term PMF, and it usually takes years and multi-cycles to get there. And usually, the internet loses interest after 2 3 years, way before any real lasting PMF gets there. Right? You may see short-term PMF driven by a hype cycle, but that disappears like that out of nowhere, right? We saw that with OpenSea last cycle, a run up, to 18 billion in the private markets and absolute
Yeah.
dominance to the end of the NFT meta like that, right? We saw similar things in DeFi where half of the blue chips from Curve to Sushi Swap to Compound lose absolute dominance. When the top during the top, everyone's saying that DeFi was going to consume the whole world. The number
Yeah,
one
yeah, yeah.
fastest
Oh
growing
my.
stablecoin back then disappeared out of nowhere with the crash of Luna and Terra, right? We saw in gaming, right, a similar effect. Gaming is the one anomaly where Axie has been the one that's only continued to deliver, where the billions of dollars have gone into funding games from venture capital has actually mostly produced very little, right? And so I
Yes.
just think that like if you look at anything in crypto history, hype cycles produce very little. There's some money to be made by retail and degens and insiders or participants, whatever you call it, right? Within that, run up, this generally really exciting hints it provides, and I think it's like at One Kicks we study everything closely, but when it comes to participation, we try to be a little bit smarter on that front, right? We still invest, but we're doing so with this context and in a very careful fashion, right? Um, and so I think everyone's right. I think they're just wrong on the time horizon. I think everyone's wrong on with what. And I don't think, and I think like, it's usually always 1 to 5 teams that, outlast hype cycles that really find true PMF that lasts, decades onwards, right? And you have to see
I
which
feel you.
teams do that.
Okay, let's talk about the Penguins because I think Penguins are, in your definition, one of these 105 teams, right? Like, tell me more about how you view Penguins, like the token on Solana, like basically like anything on top of your mind.
Yeah, I mean, Pudgy Penguins, in my opinion, is the best marketing team in the world. You know, uh,
Same. I have similar feeling.
they're not just the easily the best marketing team and ability to build a brand demonstrating the ability to build a brand in Web3, but that one of the best in the world, and they've done so with so little resources, right? And I think you know and I think that this is going to only play out further for the meme coin, and which is Pengu itself and the collection and everything around it. But I think most importantly, Igloo Inc. as a company that behind Pudgy and behind
Yes.
Abstract, right, is run by by founders that are very very young, but yet are deeply capable of executing and growing, right? I think that's a really, really important thing that people underestimate. So when we first looked at the Pudgy Penguins deal, the seed round, right, opportunity that that was Igloo Inc. For back in late 2022, the NFT
That's
markets
a
crashed.
great timing. But that's a
Yeah,
great timing looking back from now, you know?
definitely, right? I think what stood out was even though they're the 30th NFT project by a PFP project by market cap and by volume, they were the youngest founders at the helm of them. It was just a
Luca is
resoundingly
like
clear
24,
that
right? Like it's super young. He's like 24,
he's a little
25,
older,
something
I
like that.
think, but he was 23, 22 when we first met him.
Yeah, oh man, that's crazy.
Yeah, maybe around. I'm definitely mixing up the ages a little, right? But when you talk to them, they weren't green. They spent their entire lives on the internet selling products, marketing products, building communities. building businesses. They were deeply capable, and I just think that no one did the homework there, right? And I think this just shows today that they had that potential back then. They're just growing into it today, and I expect them to continue to grow in their capability and potential, right? And this is, I never say this. I don't say this for many teams, but they're the real deal. They are, in my opinion, the best founders in Web3. Uh, by far, and I expect a lot out of them.
That's awesome. That's really bullish. I'm a little pudgy holder, which really make
Awesome.
me happy in the last couple months too. But like going back to the product market fit side of things, do you think the penguins have found product market fit yet? Because I'm really trying to see because there's an NFT community, there's a token, right? There's a chain. Do you think there's PMF already, or you think there's something that's just still trying to figure out right now?
You have PMF crypto natively, but that's easy. The next step is how do you create mindshare mimetic PMF amongst everyone on the internet, right? How do you
Yes.
infiltrate the next generation of Gen Alpha? How do you make this a symbol of positivity and fun amongst everyone else who's outside of crypto, right? And this
I
is
think
the
that
next
that's what
step,
they're
right?
great at, actually. Like you saw
Yeah,
the
that's right.
Instagram, all these stuff they're doing right now, every single day.
I think a really key, sign of this is that they're the only project that's been able to, bridge and unite the Solana and Ethereum community.
Oh
It's a
my,
one
that is a
project.
genius move. That is a fucking genius move.
It is the only project in crypto in which both it is both fondly, appreciated and supported by both Ethereum OGs and Ethereum whales and the core ETH community, as well as the core Solana community. You know, in a wholly resounding fashion. And it just shows that, how powerful, the power of the penguin is and how well executed, you know, uh, the community building has been, right? It's not divisive. It's not
It's
controversial.
united. It's
Yeah,
united,
it's
which
universal,
is
right?
great.
And that's right. So I think that it just, most people will become a penguin uh, community member at some point, or in time. It just will take them a bit longer, maybe in Web3. But I think the true goal is like, how do you get the whole world loving penguins? And that is where I think that we're gonna watch, penguins really execute in 2025 and 2026 beyond.
Let's see how that goes. Thanks for sharing all those about like the penguins. Uh, the next question that I'm really curious about is like just completely from your personal point of view, right? Are you more like an Ethereum maxi or like a Solana maxi or more like the neutral side of things?
I spent most of my early days in Ethereum, right? But I'm for me, I'm an application and communities maxi.
Let's
I don't
go.
care which
I
chain
like
it's
that.
on. And
Dude, that
I
is the attitude
yeah
that we are supposed to do. You know what I mean? Stop
yeah
talking about like which chain you fucking likes. There's gonna be countless chains in the future. Whichever performs the best, whichever have the best community, whichever wins. You know what I mean?
precisely yeah. I don't really I when I look at founders raising, I don't really care which chain the launching on. I do care. I would say it does tell me, where they pick does tell me a lot about them, right? And I wouldn't say it's like either positive or negative, but it shows color, right? Um,
That's really that's really like for example, if I'm a builder building on base, like what does that tell you on the first glance? I'm just
I think it
really
depends on
curious.
the application. I think it depends on the application, right? Some applications do, should be on, arguably, have perform better depending on on different chains depending on the application that you're building, right? So if you're building something, far more, financialized, or maybe like catering to a DGen audience, Solana is gonna be probably where you want to call home for the time being, right?
Yes.
And I think if you're, doing anything, I would say is like far more nuanced and long tail and experimental. I think base is interesting. If you're looking to execute on um, play to earn or crypto native game economies, Ronin is the obvious choice, right? If you're executing on anything mass market, consumer, especially targeting North America. Abstract is the obvious choice. And I think that if you're a founder and you're not optimizing your application in respect to the initial starting point, it's not a major signal, but it is a signal. But I think long term, this is just going to be all of this is going to be abstracted anyways, and most apps are going to be multi-chain as well. And so, but so I do think that investors nowadays, need to be chain agnostic and need to let go of any sort of maximism. Like I don't again I mean to reiterate, like I only care about the best applications doing the creating net new innovation on the application layer. I care about the best communities no matter where they are. I care about the best founders no matter where they are, right? But there is some thought that I would say that you can sort of put into like picking which chain. But at least for me, when I'm picking my bets, um, it would be a lie if I said I don't have a bias towards looking at the chains that are closest to home, right? That I'm most excited about. But yeah, I do think like chain maximism is dead.
Agreed. It's all gonna be chain agnostic in the near future, I think. So
Agreed.
where the apps can reach most user, that's where they're gonna be, right? When you say consumer crypto, right? Like what are some of the categories that you're most bullishing on, like in the year of 2025 or 2026? Like also, do you think DeFi is definitely part of consumer crypto, right? Because
So I would separate consumer into two broad categories. You have entertainment, and then you have services, right? Entertainment is anything that you spend time or attention or money on for pure fun of it, right? Or for social reasons, or for expressive reasons, right? Pure consumption and entertainment. Whereas services are services, right? The financial
yeah,
services, the things that are
payment
useful,
services and stuff like that.
right? So I see like DeFi being part of obviously services, right? And there is like an overlap of like meme coins, right? It's like financialized entertainment in a way, right?
Yeah.
And a lot of like trading falls in the middle of that maybe as well. Um, I would say like a majority of my focus lies in entertainment and far less services. I think that crypto does make 10x. Everything in existing, all the stuff will likely produce 10x, 20x better sort of outcomes, right? With services, especially with DeFi, stable coins, etc. But I truly believe that the next 1,000x outcomes are going to
It need to be
likely going to
entertained.
emerge. Yeah, I believe exists with market creation, right? Payments is a big market. I think that that exists, and stablecoins are looking to disrupt that. I think that that's a big market that you invest in. But what's more interesting to me is when is to look for markets that crypto will create from the ground up, especially on the entertainment side, right? Especially with games that produce a new audience, right? Let's say.
Let's
So
go.
that's most of my focus, right? It's like games, social, new behavior loops, speculation, right? Anything in between, digital media, right? And I think the biggest narratives I'm really excited for in 2025 is actually play to earn. And I might be
Play to
the only
earn. It's
one
gonna be
saying
back.
this.
It's gonna be back.
Well,
Let's go.
play to earn is when you look past it, is all about leveraging novel token incentives to grow virtual economies, right? So let's
Yes.
go.
Yes.
Fundamentally, existing game economies, right, are closed systems where you can import value, as in buy in-app purchases, buy digital assets, but that's a one-way payment. These are economies that are closed that prohibit the exportation of that value, right? The closed gardens, right? Whereas the whole idea about building virtual economies on the blockchain is that these allow the exportation of value, the permissionless economies, right? And I do believe that by fully tokenizing, these economies on chain, effectively enables you to fully control, effectively invent, and I would say a purchasing power and user acquisition power in
Yes.
the form of token incentives, right? And teams no longer need to raise tens of millions of dollars for ad spend. Instead, they can create a community, launch a token, and create enough belief around that token to effectively command a market cap of X amount, and effectively have that as available to spend and to incentivize the growth of the game, the economy, for user acquisition or even retention, effectively out of thin air from day one. And I do believe that this is the net new, that crypto provides and brings. Um, yeah, and usually, like I think that in crypto, it takes a cycle for everything to prove itself, right?
Yes.
In 17, everyone gave up on 17 to 18 with the bear market. Everyone gave up on tokens. Tokens were seen as a scam. Tokens, were mostly shunned, and very few people cared or even talked about tokens at all, right? But it took a whole cycle in 2021, especially with DeFi, for tokens to become a legitimized idea, a legitimized design space. And I think that token incentives, aka play to earn, right? Play to earn is a far more game specific, sort of nomenclature for token incentives on the app layer. But token incentives for the application layer is a no brainer, net new superpower that applications should be leveraging carefully. Yes, but to me, this is the unfair advantage that crypto provides you. Is it a growing science? Yes. Are there a lot of unknowns, and have we yet to build a sustainable, let's say, economy that works long term? It's a
We
work in
haven't.
progress, totally. But
That's what I wanted to ask. Oh, let you
yeah,
finish. But let's finish the
but
but
I
part.
think it's hard to deny that tokens make a ton of sense. But why not token incentives and token models for applications, right? And Axie was the first ever application to effectively deploy and leverage token incentives at scale. And what was the result? $1 billion that was generated in fees in less than a year, that pushed AXS from the tens of millions FTV to 30 billion plus,
That's
in
crazy.
FTV, right? And that was the growth we saw. Was it running off a hype cycle? Yes. Was it, um, was the economy? Did the team go into that hype cycle? You know, without a strong understanding of what needed to be managed, did they overplay? Yes, I think like there was a lot of learnings that were made there, right? But I think it's hard to deny the power of such. And this is the one thing that I'm strongly confident in, that we're going to see work once again at scale, over the next 2 years.
That's really nice. I'm a really, really deep user of Steppen in its early days. I literally farmed that app. It's really interesting journey. Me and my friends. Like, what do you think is the most important thing that this new generation play to earn apps need to solve, need to do better at comparing with like those apps 2 years ago? I know tokenomics is definitely one thing, like designing a sustainable business model. Like, feel free to elaborate on that, or like point out like other things that we haven't touched based on.
So my thesis back in 21 was actually to avoid all these gaming deals that were happening. Why? Because most of the teams that were copying Axie's playbook and economy did not manage to build a real community before leveraging token incentives. They started with token incentives from day one, and that is something I deeply believe won't work. You know, and arguably, because Axie had a real community before they leveraged token incentives, they still had one after the economic crash, right?
Even
And
until
their
now,
market.
right? Even till now.
Though they've been growing once again. Yeah, they have
Yeah.
100 to 200K plus daily active users, hundreds in the monthlies, and not only that, they've managed to leverage that distribution to grow Pixels into a winner and many other games that are emerging. Right. So I'm in deep belief that you have to build a strong community that's intrinsically motivated before you leverage and deploy any form of financial incentives. I think that's number one, right?
Okay.
Secondly, I do believe that you have to build sinks. You have to take supply off the market, and you need to have this ready before you readily issue, and distribute tokens aggressively to grow. And that was what we saw, with the collapse and crash of the Axie community back in 22, right? There was an overinflation of tokens of SLP specifically,
Yes.
and the product was just not mature enough to take that supply off the market, and that supply sold, right? And I think Axie was lucky enough to survive because they had that intrinsically motivated community from day one, right? Before they had incentives. But I don't think this is. I think they got a little lucky, to be frank, as well. I think you have to have the sinks ready
You've
to
got
take
to be lucky.
supply, right? You got to have the sinks to take the supply off the market, right? And I think there's a lot. And I do think the loops in these games need to get increasingly funner, right? The least fun it is, the more expectation of ROI needs to be there, right? For people to be pulled in and to participate, right? Whereas, the fund subsidizes sort of the profit margins, right? And I think hopefully the net, outcome is that people spend $1 and they get maybe 65 cents to 85 cents back, and they say it was a great use of time.
It's a great deal because it's fun. You know what I mean?
And maybe
because
there's some
before,
luck.
There's nothing.
Right, and maybe there's beyond just skill, elements of skill in the participation of playing Axie. There's some luck involved that equalizes the playing field, right? Some RNG. There's maybe other ways to participate, there already is with trading, right, and other ways to, and other sort of ways to participate in the economy, right? But I do think, it's about, one, you have to have that community there from day one. And secondly, it's just about taking supply off the market.
That's valuable. That's really nice. Can you share some hot takes, like extremely hot ones, like for the entire Web3 space, or for like the consumer crypto specific niche? Like, for example, you can share something for builders who are building the next Play to Earn game. What are some things they should absolutely avoid? What are some things they should
I'll turn the
absolutely
focus to
respect?
social. So I'll turn the focus to social a little, right? So, one view is that. So one thing I believe in is that the net new social media network that will emerge from Web3 will probably not be a Twitter clone. I don't think decentralization is a strong enough reason and a compelling enough reason for end users, right? Composability is interesting, but it's downstream. Yes. And
good to have.
I do think that, and I do think social graphs, as people discuss them as skeuomorphic versions of Web2 products, are completely overrated and completely overhyped. And what I believe is far more interesting are net new social loops created and enabled by Web3. And what I mean by this, NFTs and collecting as this new social behavior loop. And where is this finding traction? Where is this happening today? It's Rodeo. I believe Rodeo is not perfect, but it represents the closest step towards a net new social media network and net new form of social that we've never seen before. It's extremely simple product, but so sophisticated in the incentive design, in the interaction design, and in who's participating and who's creating and how they benefit. The value prop is there. You create, you earn, and you build a following. And for the collector, there is you're spending to feel closer, to show support, to as patronage, right? As a patron. But in exchange, you own an incredibly rare and scarce digital artifact in which others may want to buy off you at some day, shaping point, right? I think that everyone, again, it goes back to the hype cycle narrative, or the theme of hype cycles. Everyone was excited about this in 21, right? And I don't think everyone was wrong. I just think they were wrong with the timing. They were wrong with what? And we needed the right team to emerge. And it's just, once again, these teams usually figure it out long after the hype cycle is over, and this PMF usually takes years after a hype cycle to end to happen. And I think Rodeo is very that for social, for NFTs, for NFT collecting. I would watch it very, very carefully. It's not perfect. It's not there yet. It's not, you know, um, you know, it's nothing. The numbers right now are nothing to celebrate over, but I think it's they've taken a very meaningful step towards envisioning and a new north star for consumer social, right, and consumer crypto. And it's being executed by one of the most experienced teams out there who've grinded on this for years and have learned through trial and error. And I think this is how you get there, right? It's not by surfing the hype cycle. As companies in the space, you have to manage that. You have to navigate that. You have to take advantage of that sometimes, right? But if you're thinking about, the next big thing that will last and make a real impact and change the face of what the internet looks like, there's only one way to do it.
You got to go to the fundamentals, like the bottom, create something that people haven't seen before, instead of giving like some good pieces about the good to have side of things.
That's right.
I like that. So it's called Rodeo.
That's right.
I think I saw it somewhere. I should.
Yeah. So check it out.
Whoever's listening, go check it out. Go check it out. Okay. It's fun. Awesome. I think we are heading to the last part of the podcast, which is for my guest. I always ask my guests to share one most interesting story of their journey, like all these years in Web3. Right? Because the podcast is called the Tales of Web3. I want people to remember who you are after you share the story. This is something that only Peter can do, right? And then this is some sort of things that you did in the past that shaped who you are today.
So I may actually be the first ever person to be rejected from joining a DAO on chain.
For those who don't know, what the fuck? Why?
That's right. So back in 2019, Ethereum insiders came together, under a DAO called Moloch DAO. This was created by Amin Soleimani, James Young, and some other core sort of, ETH, I would say luminaries back then, right? And it was a DAO focused on funding public goods for Ethereum. And Amin wanted to bring me in to do research on applications. And I was, to join as a member, right? And this, mind you, it's not an investment DAO. This is a grants DAO. So to give, you have to pledge money to give away for charity. Yeah. And, spend time and energy on this, right? And I was effectively raising my hand to say, hey, I want Ethereum to succeed. I've been focusing on end applications. We need an end application to succeed for Ethereum to succeed. And I want to produce content, identify key bottlenecks to fund, such as UX infrastructure. I think what I believe to be very critical work.
That's really nice.
And guess what? They rejected me because I was not cool enough. I did not have a big enough following.
What the fuck does not cool enough mean? Like, what the fuck?
They rejected me because they didn't know who I was, even though my work was very public, and and I had been focusing on that for a year plus. And I think like that reflects in hindsight why Ethereum is in such a awful state today, is that there's such a technocratic culture, and I was that person back then that was saying that it's applications that matter and that we need to focus on that. Yet I was turned away, but I think, maybe that was for the better, because it, lit a fire under me, and I created my own grants DAO with Metacartel, which started the whole adventure, right, around giving out grants and then launching investment out, focusing on applications. But I think like if I look back, it's like, oh yeah, everything makes a lot of sense, actually.
Dude, it's kind of sad, even back in like that was how many years ago? Like Ethereum Foundation is already like that?
That's right.
Holy shit.
That was 6 years ago. Yeah, exactly. Right. And it's a reflection to where they are today. Right. But at the same time, I don't think the, core Ethereum crowd or ETH whales or even the EF are responsible, right, for the growth of Ethereum right now today. I think it's L2s. It's L2s like Abstract, Ronin.
Oh my God. I like that. What is the
it's
magic cure? What is the magic cure? How do we solve this? How do we make Ethereum great again?
it's when people in Ethereum embrace applications and embrace supporting the favorite L2s and networks that are built by application founders specifically. Not the next
Not the
technology
L2
narrative.
founders, not
That's
the
right.
new
That's right.
DK.
I think it's completely overrated. It's like L2 founders only know, like majority of L2 founders, all they know what to do is just to market themselves on Twitter, build some Twitter hype, and sell onto retail. It's like that. This is just
Dude,
in the.
I like that. Dude, that's the real hot take you got right there.
It's just like this circle jerk that never ends. Where I think what needs to change is for real application builders to launch their own networks and to help entire applications grow. And I think we're starting to see the start of that.
That's nice because people like you who've been pushing this for many, many years now. So I'm thankful and I'm excited to see all these apps that are coming up.
Yeah, that's right. So maybe I'm just yelling into the abyss here, but I'm definitely, putting my money where my mouth is, and I've been doing so with my time and energy and capital for years on end. It's been, 6+ years, seven, maybe seven even now, right? Where I've been entirely focused on applications, and I'm not going to take my eyes off this. I do think this is where we're going to see the next biggest companies and networks emerge, the biggest chains emerge. And they're all going to start as apps that verticalize downwards, down the stack. And they're going to have massive competitive advantages over every other infra-only founder. I believe most founders in the future, most infrastructure founders and projects in the future are likely going to end up as service providers, potentially, right? I think rather than launching their own tokens, right? I think give or take, depending on the piece of technology at the different layers of the stack, but ZK Sync is a great example where they're partnering with Abstract. They're partnering with Igloo Inc. on Abstract, not competing there, right?
Yes, that's a smart way, similar to silver chains and stuff like that.
That's right. Similar with Cyber with Optimism, right? They would never be able to compete with you guys directly. So the only way forward is to partner, right? And so I see them more partnering than competing. But I think and I do expect a lot of the capital in the public that's allocated to L1 tech only infrastructure chains to reallocate to just wherever there's growth, wherever there's traction. And that is maybe a seismic shift that takes maybe even a decade long to play out slowly. But if you're allocating capital at size, this is the only way to, I think really make outsized returns. Bet on things that are seismic yet slowly becoming clearer and clearer, right?
Awesome. Thanks so much for sharing everything, man. And thanks
Absolutely.
for being in the trenches with all these app builders. Respect. And yeah, here we wrap up the Tales of Web3 Season 3, Episode 1 with Peter.
Thank you for having me.